Stock market weekly chart review for the week of January 16th through January 20th, 2023. There is one full week left of trading. It's going to be starting this Monday, January 23rd through the 27th. As far as I know, there's no holidays in there. And then we got Saturday, markets closed. We got Sunday, markets closed. And I believe these 2 days will be open. And that finishes the first month of the year. The reason why that's significant is because out of a sample size of 100 years, which is longer than I've been alive. I've been alive 46 years. So I have not even been alive half, close to half. And I'm willing to wager. I'm willing to take a high probability gamble that you have not lived 100 years either. I could be wrong, but I'm an options trader. A lot of options traders focus on high probability trades, and I'm willing to make a high probability bet that you have not lived 100 years either. So the point is, it's a long time. So out of 100 years of data looked at, 78% of 100. 78 years out of 100. The stock market follows whatever happens in the month of January. 78% of the time, January will show you what the rest of the stock market, what the rest of the trading months will look like. It's not 100%. There's 22% of the time, or we could say it a different way. Out of 100 years, 22 years out of 100, the stock market doesn't follow the month of January. But overwhelmingly, that's close to 80%, right? It's close to 80 years out of 100. This is not a 50-50. It's not even close to a 50-50. It's really close to this. So whatever's happening with January obviously is pretty important. In the description on this video, there's a link to I Have Success website. There's 3 different playlists. Feel free to look through that stuff, watch whatever you want, download whatever you want on the I Have Success website. There's 4 different things you can download. Go through it, check it out. If it's fitting for you, great. If not, that's great too. Check out the mission of I Have Success. Basically, it's to help you begin your trading journey by selling cash secured put options. Watch some videos to, in fact, you know what? Right now, I'm looking at 3 minutes and 7 seconds. So at 3 minutes and 30 seconds, I'm going to put a link up here that gives you 5 reasons why I think you should be selling cash secured put options on stocks that you want to be owning. You don't have to watch it right now. It's about to pop up, actually. It's right there. See, it just popped up. You can come back. That should be easy for you to remember. 3 minutes and 30 seconds. Use it as a test of memory. But once you know the reasons why, figuring out the how-tos will be a lot easier. At the website, ihavesuccess.com, through those playlists, that'll help you figure out the hows. When you know the whys, the hows become a lot easier. So let's look at these general markets. What I kind of consider the general markets for the U.S. And then after that, we are going to we'll look at 12 different sectors of the stock market. And depending on how long this video goes, maybe we'll look at some other stuff. Well, right now we're looking at 6 months, and each candle is a week, right? So weekly chart, 6 months of data. This is actually set up to mimic the 200-day moving average. It's not exact to the 200-day moving average, but it's relatively close. It's on a weekly chart. You can put a 40-period moving average, and that's relatively close to a 200-day. But it gives us an idea of the 200-day. So we see the dollar over the last 6 months. The dollar rallied up, and then this is a little more. It looks like a little more than 3 months. Not exactly sure, but You can see if this is 6 months here, it's not quite in the middle, right? It's a little over, but it's been going down. It peaked at this is UUP, which is an index that basically gives you an idea of the dollar. Another popular one is the Dixie. And UUP though peaked around 30.76 and hit its low just the last trading week. Hit its low of 27.30. Now we would really have to look at maybe several years to really know is about roughly a $3 drop. Is that big of a move? We have to look at some more data, but we see that it broke that 200-day moving average, and we see what the volume has been like. Had a spike right on this week, but overall it's kind of been light volume the last 1, 2, 3, 4, last month, with the exception of 1 week. TLT, which is tracking 20-year Treasury bonds. We see that TLT had been going down, and then it rallied up, it pulled back just a little bit to about this 100-point, pivoted there. Right, so we got a low, we got a higher low on a 6-month chart, and now it's getting ready. Last week it touched this 200-day moving average, but pulled back. Right, I know it pulled back because see when I highlight that candle, see the thick part of the candle. Right, it's because it's green. I know that the bottom end is where it opened. The top end is where it closed, and this is where it opened, this is where it closed. I know it traded all the way up here, but selling pressure brought it down, brought it back over there. So look at this right here. Had a pivot here, pivoted here, came down, pivoted, but look at the distance between there. Not too much of a distance there. What's going to happen next week? We'll see. But we don't know if this was really a pivot, if it was going sideways, because we'd have to look at a bit longer chart. But this is a high. We see there's a long distance before it pivoted. Went down quite a bit. Going up, it was about half, right? Roughly about half that distance to go up. This one is kind of quick. So that makes it seem like maybe there's some strength in the bonds going up. And what has been happening for at least maybe 12 months, 24 months, I don't know exactly how long, but the stock market has kind of been following what TLT has been doing. So you've kind of been able to look at TLT and get an idea of what the stock market is going to do. So it looks like we might have some upward strength there, but it's got to deal with this 200-day moving average, which is not support or resistance, but can act as support and resistance. You might think like, hey Brent, what's the difference? Well, listen, it's not support or resistance. It's a 200-day moving average, but it can act as support or resistance. For example, let's say I have a neighbor that has a baby, and I adopt the baby. Technically, I am not the baby's father, but I can act as the baby's father, right? So there's a difference. I can act as, but I'm not. And don't get all emotional on me and be like, blah, 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 whatever. Just take the point of realizing that this can act as support and resistance, but it's not support and resistance. Right now, what's resistance is right there is this. It's not a moving average, right? Moving averages can act as support or resistance, but they're not. They're moving averages. So it looks like maybe we have some potential, some power to the upside. Gold really seems to be, it's been on in this bull momentum for the last like 3 months or something like that. Got over this 200-day moving average. You can see around there it went sideways a little bit and just kind of been strong. But this week's candle, right? This candle, all right, here we got this candle. Look at this candle opened on top of on top of this bull candle and went up even and basically engulfed it, right? The body of this one is greater than the body of this one. The following week, look at that, opened, prices opened where it closed last week and even higher, right? This would fit inside of there. Now here, a little bit of slowing down. Now, sometimes what happens, it just kind of slows down and goes sideways. Just like if you were sprinting, at some point you might slow down before you sprint again, or you might, you might slow down, you might stop, and so we'll have to wait and see what happens. Volume has been, it's been increasing with volume, right? So we see this one, this one, this one, each had increasing amounts of volume. This pulled back on the volume just a little bit, but still over the volume here, hitting that that daily 50-day average. And it's not like this. It's not pulling back here. So we'll see what happens. The other thing with gold is that whether you realize it or not, this is definitely it's a politically influenced asset, and technically this is not even gold. This is gold futures. This is paper. If you go out to buy an ounce of gold, you're probably not getting that at $1,927.70, right? But you can buy the future contract. Just understand, just like this, a lot of trading and investing comes down to, when needed, being able to really have a distinction between terms and meanings and what things are and what things aren't, right? Sometimes, sometimes it can be kind of just like, hey, it's close enough, hand grenades, horseshoes, that type of thing, close enough, it'll get the job done. Other times you want pinpoint accuracy, and I don't know what your situation is. So if you know that there's these differentiations, you can properly use them when it's suitable for you. Oil. Now, oil, over the last 6 months, we saw it drop down, hit this high, actually this last candle of 100, and we've kind of been in this range, right? You see that range about kind of 70 to 80 bucks. If it really broke through this, then it would probably have this another little range of 90. So oil, weak, kind of weak on the volume, right? We see a lot of less getting up here, but we saw that over here too. But this was really kind of weak volume. This seemed to be more average than really drop down here. But, we'll see how that plays out. Bitcoin has see it, it'll be sideways, it drops down, it kind of goes up, it does this drop down, goes sideways, drop down. Now it's rallying up, so let's see how long that's going to last for. Weak volume in here. The last 2 weeks have really have been an increase in the amount of volume, but it's not like this. But nonetheless, volume is a secondary indicator, right? This is your primary indicator, is whatever the price is. That is the primary indicator. This is just kind of giving you some extra information on what's happening in there. So let's see what happens. Now, if you live in a state where they give you enough freedom to buy or trade Bitcoin, and the reason why I say it that way is because the state that I live in does not give me enough freedom to do it. So if you live in a state that grants you enough freedom, then don't necessarily invest for the long term and buy right now. Right? I would think, like, if you're looking at a weekly chart, like, you really want to see it break this, probably get over this 25. Does that mean you should invest for the long term? Not necessarily, but this is what I would recommend with Bitcoin. And just to be clear, this is not financial advice. You gotta talk to your priests, your pastors, your attorneys, your politicians. You got to talk to all the experts, because I don't know, man. I'm sorry to be so sarcastic today. Just basically, we live in a nanny state, right? We live in a nanny state, and the state always wants you to never have a decision for yourself and always go to somebody else. So if you want to be a little more independent in thought, then consider looking at Bitcoin as it's not so much consider looking at it as trading. Now, you might be in a trade for a long time, but don't just buy and hodl and close your eyes. Like, be paying attention, because this thing is super, super volatile. And look, if you can catch something on the downside here, right? You just don't want to be caught buying and holding and this drops down here and you weren't paying attention. One day you open up your brokerage account and you see that you bought at 22,000, now it's down at 15 when you could have been shorting. The VIX, we got the VIX, SPX, which is basically S&P 500. We got the Dow Jones right here. We got the Nasdaq, and we got the Russell 2000. So we basically have the overall stock market right here in 4 different indices. We can basically see what the overall stock market's doing, and this has the lovely reputation of the fear meter, right? It's the volatility index, and whether or not the fear meter is the best description of it or not, you can debate that with other people. I really don't care. I would love to hear your opinion on it, but I'm just not going to debate that because I just really don't have an opinion on it. And but what it definitely does is that what tends to happen is, generally speaking, when you have a high in the VIX, you tend to have a low in the stock market. Just kind of generally speaking, that seems to be the way it's going. And so we're at a low, not last week, but the week before we hit a low. Stock market's been moving up over here overall, like last 3 weeks, 4 weeks, whatever, last 3 weeks, 4 weeks. I get it, dropped off right here, but there's a move up overall. And I mean, if we want to look at it this way, we could say over the last 6 months, or maybe a little more, over the last 200 days, stock market's been moving down. Over the last 200 days, stock market's been moving down. Over the last 200 days, stock market's been moving down. Over the last 200 days, stock market's been moving down. So we got 4 out of 4 have downward sloping 200-day moving averages, right? And then we're basically battling the 200-day moving average here. We're over the 200-day moving average here. We're under the 200-day moving average here. And I mean, if we're going to count this as battling, should we count this as battling? It's getting a little bit subjective on that part, right? Not subjective on which way the moving average is going. That's not subjective. That's very objective. Down, 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 down. This one, it's just like started kind of almost flattening out here, but you see it started here, ended here, so very objective. This is objectively over the 200-day moving average. This is objectively under the 200-day moving average. This is over the 200-day moving average. This is over the 200-day moving average. It's not a lot of strength. So, okay, let's just go with pure objective way of looking at it for the moment. So we got 4 out of 4 with downward sloping 200-day moving averages, showing us a long-term trend over 200 days. And the last week, we have 3 out of 4 above the 200-day moving average. I know this one has been above the 200-day moving average for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks. Well, now we have 3 out of 4. So let's see what happens. How long is it going to take for this one to get on top of the 200-day moving average? Of course, these have to stay on top of the 200-day moving average. If that happens, when you see definitely on a weekly chart, right? Don't put this at 200 days. Put this at 40. Let me make sure I show you. Right? 40. Select 40, not 200. And why is that? Let me see if I can figure out that calculation real quick. Calendar, oh boy, that's not what I wanted. Calculator. So 200 days divided by 5 trading days, right? 5 trading days in a week on average. 200-day moving average divided by 5, right? 40. And so on your monthly chart, what are you going to do? Now, there's 30 days in a month, but how many trading days, right? 5 trading days times generally 4 weeks. 20 trading days in a month. So 200-day moving average divided by 20 trading days in a month. Boom, 10. If you want to get it close to simulating your 200-day moving average. So so on the weekly chart, when we see if we see all 4 of these indices above the 200-day moving average, that's pretty significant, right? If they can all get above, and not just get above like this, I mean stay above like this, right? That's staying above right now. Right now, it came down here, it had a slow pivot, right in here, kind of came back up. But even here, if we just look in a really short term, we got low, higher low. So there's nothing indicating to me that that this is going to come crashing through the 200-day moving average. I mean, it's not like this going, it's not doing this to the upside, but at the same time, right, it is maintaining above for, what is that? What do we count? 11 weeks. You know, that's over 2 months. So if we see the other markets doing that too, then that's a sign that we want to take that, you know, put that into some consideration of bullish move to the upside. Now, if next week, or you know, in a couple weeks, if the Russell 2000 is doing this, boom, falling back, boom, falling back. If it does that, boom, falls back. If the S&P 500 falls back, if this never makes it or touches, like right here, never made it, it tried to make it, right? Then we want to use that information to be looking at, you know, a little, I'm going to take that into a bearish consideration. And the other thing that maybe I don't need to point this out to you, but let me point it out to you nonetheless. Like, Phil Grande has a great way of saying this: when the market's open, you lose your opinion so you don't lose your money. So if you notice that you have a desire for the market to move a certain way, it's probably in your best interest to lose that desire. Replace that desire with profit. How do you profit? You profit by not hoping the market goes a certain way, about correctly positioning, analyzing which way the market's going to go, and here's the other part, and thinking about, if you're wrong, how are you going to adjust, right? So it's not just about being right. The way that you're going to be right is to realize that there's no 100% way to know. We looked at a study that was done, 100 years of data, right? Out of 100 years of data, only 78% of the time, right? So it's not 100%. So look at, okay, this seems like the best case scenario, or the most likely, the most probable outcome. However, if I'm wrong, how could I adjust? And what do I need to see happening to show me that I'm right or wrong? So that way you can be monitoring it. Unless you want to be selling cash secured put options on stocks you don't mind owning, then it kind of doesn't matter. But anyway, so that's what we see going on, right? So we see, you know, from, look at where the price is at right here. Right, boom, right there, sideways, right? Yeah, it went up a little bit. Yeah, it went down a lot. But if you figure price action was right in this area, boom, it's back in this area. How about now? A little bit up. How about with this? A little bit lower. How about here? Sideways. So we got 2 out of 4 going sideways. We got 1 out of 4 going up. We got 1 out of 4 going down. You know what that tells me? It tells me sideways. It tells me sideways. Again, you know, it's not 100%, but let's put some numbers on here. If this, right, what do we see going on? Here was our, here roughly, you know, ending there. Where was it at 6 months ago? Right there. I get it, it closed up there. So technically you could say it went down if you want. But price action was in that area. Sideways. This one, that's, you know, that maybe think that's sideways too. It's a little bit up. Over here, closed here. That's definitely, that's down. And closed here. It's kind of sideways, right? Sideways the down. Sideways the up. Down. Sideways. So even more case in point. It's like, seems like we, you know, depending on how you want to measure it, like, I think the most accurate way to measure it would be everything is sideways the down, seemingly. So that's really what I'm thinking. I think we're gonna have a lot of volatility though, but You know, when the market opens, I lose my opinion, so I don't lose my money. And every candle, every day, every week, every hour, hour by hour, whatever, 15 minutes by 15 minutes, I'm gonna be reorganizing my opinion the close of every candle. Let's look at these different sectors. And since we have 12 of them, can we go through? How can we go through this somewhat quickly? Right, we're all kind of let's see. Okay, so healthcare had a down last couple weeks, been down. Technology's been up, really low on the volume here, pretty low on the volume here, and financials. These three are pretty important, at least into the S&P 500. This one and this one's been pretty important to the stock market. This one for years has been pretty important to the stock market. And overall up, overall close here, sideways, you know, overall down. It's kind of like a sideways 200-day moving average, down, but now it's on top of it. Volume has been really weak. All this buying volume in there, look at how weak that buying volume was. So it's not too shocking to see a sell-off. Over here on those industrials, had a big rally in kind of roughly around 3 months ago. Was that 3 to 4 months ago, something like that? And then what? Kind of dropped down, but overall seemed to be somewhat sideways, kind of range bound. 200-day moving average slightly sloping down. Basic materials and starting to flatten out, really, kind of reflecting, I guess, this sort of somewhat sideways. Basic materials really kind of having this not a big slope like this though, right? Not a downward slope like that, but it is a bit of a slope down. But price action closed here up over 6 months there. Really sold off, really kind of went up. A lot of volatility. Like this chart looks pretty similar to this chart, and also a little bit similar here, right? In the XLF. If it was a little steeper, this is kind of through here, kind of looks similar, sort of similar in there. A lot of times you will see, you know, similarities. So if someone has a bit of an untrained eye, they might think it looks like, you know, pretty much exactly the same. Then you can start looking at these little details. Energy though overall has been going up, but look at that. So I don't know, but here's the thing: just because there's low volume, does that mean the price can't go up? No. But maybe to sustain something, maybe to break new highs, you know, just realize like this is sort of like your energy. There's a lot of energy behind it, but don't think though that things can't move up or can't move down because it's low volume. But maybe when there's low volume, maybe it makes it easier to fall to the downside. Consumer discretionary has really been down over the last 6 months. Consumer staples kind of went sideways. Opened, closed here, just down a little bit, but you see that that 200-day moving average did slope down just a little bit, but you know, depending on, I think if we looked at a larger, more time set, like a year, maybe 2 years, maybe we'd see it moving sideways. I don't know. Not sure. Not sure exactly. That's the great thing, you know, about being a net option seller. You don't have to be sure exactly. If you want to be an option seller and you're going to put on a lot of directional trades, you kind of have to be sure, or at least you have to be right to make money. You just when it comes to selling options, you just, instead of needing to be right, you just need not to be too wrong, right? It has a lot of wiggle room for error. And so wow, look at this. Consumer staples and utilities looking pretty similar there. And over here on real estate is making a little bit of comeback, but everything's got some light volume here. And retail, it trying to make a comeback. We got a low, higher low, but it's up against this. Where do we see that at? Also on one of those indices, low, higher low, low, and it's kind of going sideways, but higher low, low, higher low. Maybe gonna make a new higher low. This kind of in the subtrend, low, higher low, low, higher low, was floating back down, low, higher low, maybe another higher low, low, higher low, low, higher low, low, higher low. So I think we might have a bit of of this going on. I think we've got pressures pushing things down, and we got some pressures pushing things up. So, but it probably just won't go flat sideways. It'll probably go like this. That's and you know, I really don't care if I'm wrong. If I'm wrong, I'm gonna see it in the charts. And you know, actually, if you think about it this way, I can never be wrong. The reason why I can never be wrong is that there is no guarantee. There's no absolute. This is not math. This is not reading something, right? What's the definition of this word? That's not that. This is putting together a variety of information and trying to make a financially profitable decision off of it. So that's really it. Like, I'm wrong if I lose money. You're wrong if you lose money. So, but now what if the chart, what if the asset price goes a direction you didn't think it was going to go, and then you adjust and you stop yourself from losing money? Were you wrong? No, you weren't wrong, because you were prepared. You realized that you couldn't be 100% like knowing it. And again, that's why I love selling cash secured put options on stocks I don't mind owning. Let's take a look at let's take a look. Where is it? Let's look over here at the SPY so we can see some volume. And pretend this is not the S&P 500, right? Just for a moment. Forget about these prices. But and what I mean by forget about the prices is, let's say if your account is not big enough to buy 100 shares of this, just forget about the prices in that regard, right? Pretend, we'll look at these numbers, but pretend like whatever, this somehow fits in your account, you know, if it doesn't. So overall, this is tracking 500 of the biggest stocks, or yeah, kind of like that, these relatively bigger stocks. You know, Russell 2000 has smaller cap stocks. This is going to have a little bit bigger stocks, and so it's a good proxy for the overall stock market. So okay, we see volume, right, has been low, but things have been moving up on this lower volume, right? And let's say this was a company and not an index, and it was a company that you know, you checked out their like free cash flow. You notice they got a lot of free cash flow. Let's say you saw that they got kind of a low amount of debt. You know, their dividend, they pay like whatever. Let's say you're getting about 3% yield, and it has like a payout ratio of like 30 to 40%. So it doesn't seem like you don't see any red flags with the dividends. And things have pulled back a bit. So enterprise value to EBITDA, let's say it's at like 8, and let's say the PE ratio around, let's say 10 or something, and you know, depend on the sector. And it's like overall, it's like, okay, it seems like this is a pretty decent buy. And let's say it's a company that has a low chance of falling victim to obsolescence risk. What's obsolescence risk? Well, research Blockbuster. That is a great example of obsolescence risk. And so and let's say the company's been around 70 years, 70, 80 years, right? Okay, it's you know, it's something that that humans, as long as humans are alive, they'll still be using them. Now, obviously, the company has to stay up to date with technology and stuff like this, but you know, for example, records, you know, as long as humans are alive, humans don't need records, right? Records. You know what records are? The vinyl stuff. Don't need that. But they need food, right? Humans need food. But there was records are an example of obsolescence risk, right? They went obsolete due to tapes, and then tape cassettes went obsolete due to CDs, and then CDs went obsolete due to whatever MP3s, and MP3s seem to be kind of going obsolete due to like streaming or however the case may be, right? So obsolescence risk. And so now you don't need to be like super big on direction if you have the money to buy 100 share, at least 100 shares of the stock. We're pretending this is a company, right? We're going to pretend this is company X, Y, and XYB. How about that? I hope that's not a real ticker. We'll just XYBC. XYBCE. There's probably should be no company like that. Let's add another Y just to make sure, and add an I. All right, so I don't think there's any real company like that. So now we're looking at this particular company, and so what do we see going on here? Lots of volatility, right? Lots of volatility. Well, there's a variety of ways you could look at selling your cash secured put options. One, you could just sell it, right? You could just sell it, because let's say you sell it, and let's say you bring in, let's say you want to buy the stock. You got enough money to buy it down here, right? That's one thing that you could do. You could say, like, this is sometimes what I'll do. I'll say, hey, X amount of time. This is a weekly chart. I could, if I wanted to find out exactly, you can go over here. This when was this? All right, that was all right, October 10th of last year. It got down here, hit a low, right? So, and it's been ever since then. It has been over that, right? Got a low, got a lower, higher low. So, you know, maybe I'll sell at 360. It's a little bit of ways. Is there any premium there? I don't know, but let's say whatever amount of premium I make right here, right? I'm okay with it, because I want to buy 100 shares at this price. If I buy 100 shares at this price, how would that happen? It means basically, now you can get assigned before expiration date, but generally speaking, it's because the price is going to be lower than 360 on expiration date. But I'm totally okay with buying 100 shares at 360, and I keep this premium. So that's one way I could do it. Another way I could do it is I could say, you know what I want? I want more premium. I'm sell up here. That's a higher risk, because look at it, could come back down here. Could technically come back down here. It's a higher risk, but I'll get paid more premium up front. I could take an even lower risk. I could sell at strike price of 340. I'm making even less premium, you know, just a tiny little bit of premium. But I have a higher probability of this expiring worthless, and if this crashes all the way down here, that's a way better cost basis than here. $20 cheaper than here. What's cost basis? It's the cost that you're buying your asset at. And so the beauty is that whatever you decide for yourself, like you decide what's going to be the best thing for you, and make sure you're thinking at first about the risks involved, right? Don't get blinded by the dollar. Don't be doing that. Don't get blinded by the dollar. Think about the risk. Make sure you're comfortable with the risk. Because I tell you what, they're there, even if you don't know them. And better yet, if you're putting on a trade, and you're thinking, oh, there's no way I can lose money, or I don't even know how I could lose out of this, then that should be an indication that you definitely are blind to something, because there's always a risk when it comes to this stuff. Right now, over time, with skill, you could potentially create risk-free trades, but as a new person, I'm just indicating that, like, the only way you create risk-free trades is by knowing what your risk is and adjusting and hedging that risk. You don't just put one random trade on and it was risk-free. But I do think that selling cash secured put options on stocks you don't mind owning, if you're picking good stocks, is one of the closest ways where you can just enter a trade and have it be kind of risk-free. You know, the risk is that you're picking an Enron, you're picking a Blockbuster, you're picking a FTX, you're picking a Bernie Madoff, you're picking a MF Global, you're picking a you know, something that either is a total outright fraud or just, you know, you're picking a Neo, you're picking a something that's just not good, right? So learn to do a little bit of due diligence, and even more, paper trade before you start risking your real money. Paper trade. So hopefully that helped a little bit as far as checking those out. So let's quickly go through and look at what we see here. Here's a monthly chart. So what do we see? This is what I see. I see prices moving up this way and kind of right. I don't see it. It's like flat here, kind of, but then it's like flat here. So if it's flat there and flat there, kind of like down, right? So I don't know. Price is going to potentially break one way or the other. Let's look at at some other things, see if we can get a little more idea. Dow Jones. Volume on the Dow Jones been weak, just like the SPY. Monthly chart, we see going up here, kind of flat here, right? So we got a high, we got a lower high, but we also have a low, we got a higher low. Are we doing the same thing? Something kind of like that, maybe, right? Seems like this was some resistance right in here. What are we looking at? 3 years. Yeah, right in here is a bit of resistance. In here, it's kind of overlapping in here, but it seems to be on the top end of that now. So we'll have to see, but potentially, yeah, could be. Volume on that monthly, it's pretty good over the months. What's the next one? Probably Qs. Take a look at the Qs. You can really see that, right? The 200-day moving average is just really showing it. Now here, flat here. Do you remember when we talked about this? When one side is flat and you got other side pushing to that side, right? It's like the spring is getting pushed from this side. So sooner or later, if there's enough pressure, it's possible, boom, it could be breaking to that side. It's not a guarantee. Gold and silver were doing that for a little while. Gold broke to the upside, silver went sideways. It's not a guarantee that's going to happen. But, right? But I'll tell you what, it's a higher probability that's going to break to the downside when you see this than break to the upside, with all things being equal. Now let's look at the Russell 2000. It's not really the Russell 2000. It's IWM, but it's like it's an ETF kind of the Russell 2000. And yeah, I see a little bit of, I see sideways, kind of sideways on the top, right? I hope you see that through there. Kind of, right? Kind of. Bottom here, but look at that. So, not sure. Maybe it's going to push to the top like that. But definitely it seemed like it kind of bottomed out around here, a little bit higher. And seems like in that area, just catching some. So if you want to see it move to the upside, it seems like right in this area, it's got to get past whatever this is. What is that? Something like around the, somewhere between, you know, I guess maybe 206 to possibly like 212, somewhere in there. Seems like there's a bit of resistance in there if you want to see it moving moving to the upside. Volume falling off though, and it a 200-day, it last week closed on top of the 200-day, not by much. The very last month, sorry, 3 months ago, close on top of it. Next month, boom, falls below it. Next month, boom, shooting up. This month's not done, so it could go higher. Price is pulling back just a little bit, maybe in there. And what do we see going on here? Right, we got the spike up here, but yeah, that's at that 200, and here it goes. You can see all that congestion right in there, but it looks like that 190 on the weekly is pretty significant. Low volume, low, lower low, higher low. Yeah, it's I think for me personally, and this isn't like, for me personally, I what is super good for me to be doing right now, selling cash secured put options on stocks I want to own, and I'm focused on the strike price I want to buy it. I don't really care about how much premium I'm bringing in. As long as I'm bringing premium, I want to give myself some extra protection if things drop. I'm selling a bit further away from where the stock is trading at, and I'm focused on, I want to buy at a good price. And if that means I make less premium, I don't care, because if this market drops, I'm buying at a price that I want. I've already made that mistake. I learned that lesson already about you know, premium focused. In an up market, yeah, then I would be more premium focused, but I don't know which direction it's going to be exactly. So that's one way I'm protecting myself. The other thing that I'm doing is I'm selling a lot of covered call options, and I'm selling some naked call options. Should you be selling naked call options? No, not unless you know how to manage the risk. If you want to find out, check out that playlist on my YouTube channel. It's like paper trading for success, paper trading something or other. That I've been really walking through managing a naked call option, selling a naked call option on Apple, and to adjust naked call, you could turn it into a credit spread, you could turn it into a debit spread, you could roll it, or you could turn it to a covered call. I'm practicing with that particular trade to turn it into a covered call. So if you wanna, check that out, you paper trade that stuff. So if you haven't really traded your real money yet, I wouldn't be trading my real money right now. If you're completely new, wait till January's done. Have a better idea of what's going on with the market, right? In the meantime, go crazy paper trading, but don't necessarily risk your real money. The stock market's not going away. There's a good chance you're probably 30 to 40, maybe 50 watching, about 50 years old, anywhere from 30 to 50 years old if you're watching this. Maybe a little older, maybe a little younger, I don't know, but there's a good chance you're somewhere in that age range. The stock market was already around, right? We talked about the stock market's been around for over 100 years. It's not going away. Don't get impatient. You want to be the tortoise. Now, this might not be the greatest picture of a tortoise, but it's a pretty darn good tortoise right here. Right? That's a good tortoise. You want to be the tortoise. You don't want to be the hare. Oh, that's a great picture of a hare. Right? You don't want to be the hare. If you're just starting, you don't want to be the hare. You're not sprinting here. You're gonna run this long race. Long race. So you guys have a fantastic day. I hope you enjoyed my drawings. I absolutely have enjoyed them. And you guys have a fantastic day. And I will talk to you later. Aloha.